Friday. You're watching Business World Live. I'm Danie Laurel. It's the start of a new trading day. Let's go straight to our top story. IHS Market expects stronger private consumption and government infrastructure spending to boost growth in 2022. The London-based market intel provider says the Philippine economy could grow by 7.1% next year as the COVID-19 cases in the country continue to decline. IHS Market says improving remittance inflows could also contribute to stronger growth in 2022. Now, for this year, IHS Market expects a GDP growth of 5%, which is at the higher end of the government's revised target of 4 to 5%. IHS Market says the October factory output survey indicated increasing business confidence among manufacturing firms. The country's manufacturing purchasing index rose to a 7-month high of 51 in October. Recall that a reading above 50 indicates expansion in the sector. However, they note that government vaccine rollout is constrained by low supply, and this could make economic recovery vulnerable to renewed outbreaks. And as expected, the Bangko Sentral kept policy rates unchanged, saying an accommodative stance is key to economic recovery. The Bangko Sentral left the key rate steady at 2%. It also maintained the overnight deposit and lending rates at historic lows. The central bank's decision comes a week after the government reported a 7.1% economic growth rate in the third quarter. PSP Governor Ben Diokno said economic growth appears to be gaining solid traction driven by improved mobility and sentiment amid relaxed protocols and continuous vaccination drives. BSP Deputy Governor Francisco Daquila said it is thus crucial to continue policy support at this time until there is very strong evidence of higher demand. But apart from an accommodative stance, the Monetary Board noted that sustained measures to safeguard public health and welfare remain crucial to facilitate recovery in investments and employment. Quick check on the local unit after that expected continued rate pause. You can see on my terminal here a bit of weakness early in the trading day. That's 50 spot 265 to the greenback. This after it had actually risen or strengthened for the first time in 4 days before that policy decision. Let's take a look at our index going the other way here. That is down by 0.1%, continuing that fall. Yesterday we were already below 7,300. Analysts said that sideways trading will continue to ensue. Let's take a look at the movers this morning. 3 minutes into trade, Mega World, the best performer here, up by 1.3%. But you've got Converge continuing that slide, down by 3.4%, with San Miguel and ICTSI. And I want to focus on one specific stock. I'll pull out PAL here, and that's on the back of them reporting that their losses since the bankruptcy filing has actually reached 2.89 billion pesos already. Recall that we had reported they were on the mend with 40% of their flights being operational, but as of the end of October, that was of course a cumulative loss of 2.89 billion. They're hoping to exit the Chapter 11 process before the end of the year. But there is one sector in focus today, and that is energy. And here to chat with us more about that, we have with us Ed Francisco, the president of BDO Capital. Good morning, Sir Ed, and welcome to Business World Live.
Morning, Danny.
So Ed, I wanted to focus on energy because there's so much talk about inflation, oil prices, reopening of the economy, and of course, hopefully the usage of more of these consumption, and that has pegged the renewable energy players against time and again against the non-renewable energy players. But we did also see such a surge in the likes of DMCI and the likes of Semirara. Where would you be looking at, and what are the coming trends when you're looking at these stocks?
Yeah. No, I guess from a longer term perspective, of course, the directive or the direction is really more for renewables, right? Less on fossil, less on coal. That's the longer term. Now, I guess if you look at it from the trading side, people were pleasantly surprised at what happened with Semrara and DMCI because of what happened with China and the shortages. Prices spiked up because there was not enough supply really, and even for coal was required. Medium term to longer term, the ADB is coming with some plans to help reduce, I guess, or help shift from coal. But that's really a transition. So we really need to do a transition But that's why even companies like AC are getting out of selling their fossil and going all as much as possible into renewables, and even some other clients that you can talk about later on.
Sir, you mentioned that in the long term, renewable energy should be, the focus here. How do we distinguish within that group of renewable energy players? How do you understand which ones are doing better than the others? You've got AC Energy now; they're starting the Vietnam wind farm. You've got, of course, FGen, but now even Meralco, the power
Yeah.
distributor, which has distributed also from coal, is tapping into 76 billion pesos of renewable energy projects. How do you compare all of these companies?
Yeah. No, of course they're all very good. I guess one thing that we've realized from a valuation perspective, investors like and are willing to pay more for a renewable energy firm than a coal firm. Okay, so if I'm gonna produce the same amount of income, apparently investors will pay almost double or triple for renewable energy than coal. So that means if I were gonna build a power plant today, and if I could get the same ROI, I'd build renewable, and that's why the valuation of ASEN is so high, and the rest. And that's why also Meralco has realized that when I talked to Mr. Ray Espinosa, they already have anyway the global power assets, right? But they will build more renewable because that's the way to go. And then hopefully investors will realize that, and that will also mean that the sum of the parts valuation of Meralco should go up significantly once they build up all this renewable energy in the plants of Mr. Espinosa.
Do you think that investors are pricing that in the share price of Meralco, the possibility that they're going to start becoming real, not just distributors but generators in renewable energy?
Not yet, Danny. In fact, that's why I think there's still a gem, right? There's so many things that Meralco is doing. I kid them when I tell them about their SSS super sub strategy, because they're reinventing themselves from the old power monopolistic distribution into one with fiber broadband, with the red, with buy and tell, with their fintech, diba? And then they're looking into Miescore and building other things, you know. So it's they're reinventing themselves or expanding, and then their power, they're putting power generation, and then they're gonna go into renewables. So the valuation is significantly is still not being recognized, and that can kick up further. And that's why I'm surprised that their market cap is at one point it's above PLDT, and now I think it's a little below, but they are neck and neck, no. So that remains something to be seen if they can, I guess, consummate all these plans, and there's a big upside really in the stock.
Very interesting. So maybe a shift from distribution towards generation. So what about the solar PH IPO? Is this just a drop in the bucket when you look at the megawatt power, or is this going to be a shake up in the industry when they do IPO? And also, how are the investors looking at these assets? Do they change from one to another, or is it more that the ones invested in the traditional energy players are putting their money into renewables and diversifying?
Okay. Yes, I think we noticed that investors are diversifying. So when there are renewable energy IPOs or even bond deals, etc., because these are renewable and also sustainable, right? Which is the in thing now. People flock to it. There's really a preference to it, even if there's sometimes no pricing advantage. So solar, anyway, Leandro Leviste has a very good group, and of course, yes, that franchise, which is I guess a big advantage. So he has just to execute. Does this solar PH Mebaisia is just one of his assets anyway. It's small relative to what he can eventually have and develop. So we wish him luck because he's done already some work with others and sold and partnered already with some other multinationals. So we wish him luck, and then we'll watch the stock close.
Okay, so you're going to be comparing this, nevertheless, even if it's a smaller player, with the likes of ASEN and for example, sir.
Yeah, no, Asen of course is there. I've talked to Eric Francia. We were together in some webinars, and we'll be in another one next week. In fact, there's this Phoenix thing. We invite everybody, sustainability. But Eric is largely on the way. will be, very successful, but that does not mean that the other players can go in because it's not yet crowded. There's so much potential because we were computing that even if all these other players came in, there's still going to be a shortfall in terms of renewable energy. So my advice is for those players, as long as you can get your plans in place and your funding in place, go ahead. There's going to be a dearth in the renewable energy, and as expected, right? We're going to have brownouts next year, so we need more energy, and renewable is the way to go also.
Sir, what about the Citicorp REIT? What's the rationale of REITing solar assets instead of what Levista is doing, which is an IPO? And how can you compare this REIT to the other REITs in the market, which are of course with more commercial assets?
Yeah, Danny, that's a great question because City Corner is what as people as our audience reads more. What are you investing in more? Are you investing more is an energy company, or
Mm.
are you investing more because this is a REIT and this is more the cash flow play? So
Mhm.
I guess by talking with Edgar Saavedra, and Oliver Tan, the CEO, we're trying to do the best of both, right? This will be the first non-real estate REIT, but then so you get the consistency of the cash flows, but from a solar play, so renewable. So you get renewable energy, and then you get the constant cash flow. So we just basically are assigning the cash flows of the plants, and it's accepted. There's already significant demand. I think this will be the first of many because the REITs were designed not just for real estate. We hope that we will see hospitals, tollways, some other even resorts with or utilities with constant cash flows coming in. Those are possibilities for the REITs of next year because the big boys, the REITs have come out already. Now it's the chance for the other kind of businesses with steady cash flows to do REITs also because that's a way also to get a boost for your income and your lower your taxes.
Sir, but just to understand, because it's easy to understand the dividends when it comes from tenants of office buildings or mall tenants, but you can
Right.
calculate it. In this sense, do you calculate the energy profits, or is it just the rental of the energy players from the land that this REIT is leasing?
Ah, right. In this case, it's really the energy profits that we're assigning, right? But and
Okay.
basically, so it's not the land. Kasi you could yeah you could if the land was owned property, you could also assign
Oo.
the cash flows from the landlord. If you're a landlord in malls, if you're a landlord in power plants, it's really the same. You just
Mhm.
generate rent. You can also do a REIT based on that. In this case, it's really the profits of the power plants. In this case, it's solar, but if you think about it,
Oh,
because there's an
interesting.
advantage, diba, when you do a RIT, you should declare more than minimum 90% of your income, and then it's tax free. So that
Oo.
improves really the yield. So it's good for the investor, it improves their yield. It's also good for the yeah, and even for the issuer. So parang that's why the yield will go close to parang 6%, and you're investing in a sustainable investment kasi
Asset.
it's renewable energy.
Very interesting. You're actually investing in the asset, not in the land. No? Okay, sir. Let's talk quickly about Udena and Malampaya's story. You were there. You talked about it
Yes.
offline. And they are of course complaining, saying that they've done everything above board, and that this is now affecting their ability to finance and close other deals within the Dennis Oy network. We called him the guy with the golden touch pre-pandemic. Do you see this happening, that that this graph complaint might actually have an impact on the ability to continue? They have massive ambitions here, particularly the telco space.
Yes. No. In my case, anyway, as you know, we are a bank. We support the Udena and Dennis Uy Group for a long time. That's why mentioned by Marty Escalona, the president. We did the IPO for Phoenix. We did the IPO for Chelsea, and we helped them in so many other projects. So we wanted really to understand. I was there personally to understand, and I heard him say that, he talked about why will Shell and Chevron sell it to them if they were not qualified. So that was the basis. Wala naman, there's no hanky-panky. There were many other bidders who bid, and yet they were awarded. So there was no under the table. These companies have such great corporate governance; they will not allow that. So they were just saying that these accusations, at least thrown on them, are wrong. And then he was explaining. I was surprised to learn how much pala PNOC will get, even by just retaining their own ownership. So why invest more? And in the past, they've never exercised their rights to buy anyway when there were so many sales in the past. So those made sense to me. But I hope that the message was made because understandably, at least the business organizations were just requesting clarification. Diba? There were I think 7 or 8 organizations who signed. So having been involved with most of those organizations, I just wanted to hear them, hear the story from you, Della, and hopefully it was explained well.
Okay, thank you, sir, for that those insights and clarification. And finally, just your outlook on the bourse. We are now just a few days to few weeks towards the Christmas rally. Hopefully, we've been pulling back a touch from the 73, 7400 levels we were hoping for. But now it's all hands on deck. Na everybody's going to the malls. Things are reopening.
Yes, yes.
Has the rally already been underway, or is there still more room to run, especially after you've gotten the third quarter GDP print na, you've gotten the PSP decision already, and inflation still looming, and possibly threatening that rally.
Yeah. No, I think the 74 to 7500 is a very doable or very realistic for year end. So now people are just taking profits already. But at least, right, the third quarter results were very good. GDP numbers were very good. So the index went down not because they were disappointed, but people took profits already. But we're seeing that at least it's great. Face shields are not required, at least in alert level 1, 2, and 3. So it's good to be able to walk around. Malls are full, restaurants are being occupied again. The people are happy. I've been going out and talk to the waiters, the cashiers. They're extremely happy. Their business is reopening. As that happens, and then the Christmas spirit comes in, even and then as you know, naman sa year end, diba, there's also that sometimes they call it window dressing,
Correct.
but that will push the stocks up. So I'm very confident the year end will do well. Here's the only thing that could possibly bring the stocks down. We're already seeing signs of this garbage or mudslinging among the presidentiables. So if that really gets bad and if that scares the investors, then it's their fault of this campaigning because we're doing our job already. The people on the ground are working. The corporate sector is doing their job. Huwag lang masyado magsiraan because matatakot yung investors, especially from abroad. And then pangit ang tingin sa atin.
Okay, and also the foreign flows.
Yes, and the foreign flows. Mahina na nga, then hihina pa lalo. But good thing na lang that the local flows are there.
Very interesting. So still a lot to watch out for. Let's just keep on that path. Hopefully getting to the 74, 7500 levels in that Christmas rally. Thank you so much, Ed Francisco, President of BDO Capital.
Thank you. Bye-bye.
Checking in on the biggest headlines, the Mines and Geosciences Bureau says domestic ore processing could boost the mining industry's share to GDP. That's why they're supporting House Bill 9775, which is still pending at the committee level. The proposed promotion of mineral processing and value-added act seeks to reduce exports of nickel and other raw metallic ore and encourages local mineral processing. The MGB says that passing this bill could potentially double or triple the industry's contribution to GDP compared to directly exporting raw ores. However, the Bureau believes that the bill will not be passed during this Congress. Currently, there are 2 domestic mineral processing plants capable of handling the low-grade nickel. These are the plants operated by Coral Bay Nickel in Palawan and Taganito HPAL Nickel in Surigao del Sur. Now, the BSP expects to see more bank mergers and acquisitions after financial regulators agreed to streamline the processing of applications. BSP Governor Ben Diokno said monetary authorities are processing 5 applications, including 4 mergers and consolidation and 1 for acquisition. Earlier this month, the BSP entered into a memorandum of agreement with other state agencies to streamline the process for bank MCAs. The regulators agreed on a harmonized list of requirements for merger, consolidation, and acquisition proposals of banks, effectively cutting by half the number of documentary requirements to 30 from 58. And that's a first look into the business day. Today's Friday, November 19, 2021. Catch Business World Live for the market close. It's at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.